All right, what's up guys? Anthony here, Special Analysis. Welcome to the video. As I do every day, I kind of recap the thought process which I had regarding my own personal trades, and I do this for a reason so that you all have the opportunity to kind of get to know the way I approach the market. Because the service I ultimately provide, guys, is analysis, interpretation, expectations. What you do with that information is completely and totally up to you. I'm not here to tell you how to trade by any means. But if you are looking at the market, staring at it, and having a hard time gaining the perspective, that's what I provide. Now, understanding that with that provision comes risk, all right? So at the end of the day, you have to employ your own trade plan. I don't tell you where to enter the trade. I don't tell you where to exit the trade. I simply provide the analysis, the interpretation, and the expectation. Understanding that that can change, of course, in a blink of an eye, and that there are no guarantees inside the market whatsoever. But this morning, let me tell you exactly my thought process so that you can kind of gauge how I played the market myself and exactly what I disclosed live to the folks that were with me, alongside me, inside the market as it was ticking away. So we got started a little early this morning. Okay, I normally come to the computer 6:30, 7 o'clock. I want to watch the market, get my bearings, kind of understand how the reaction between buyers and sellers is transacting. And if there's a way for me to capitalize on that. So the market was kind of selling off here. You can see we were riding the VWAPs here to the downside. Came to the market here, watched this nice push lower. And what I was really looking for was a retracement here into the bodies of this consolidative state right here. Okay, and this happened for, we entered it, we went sideways for about 15 minutes, we pulled out. And I was looking for a retest specifically here. Notice that we had ultra high selling volume on this candle with zero follow through. So I didn't want to chase the price. I was looking for it to pull back to where it initially fell from and see if I could get a low risk entry. And that's ultimately exactly what transpired. We pulled back in here and I drew this box on the screen that we share live every day alongside with the order flow and the liquidity, and I jumped on the mic early, right? Like this is 7:10, 7:15 as this is all transpiring. I'm like, hey guys, I know it's a little bit before the session, but I just want to let you know exactly what I'm watching. I'm watching specifically, if price pulls back up into this area, if it holds here and is unsuccessful in pushing through it, for it to fall down into 80, right? The 75 to 80 range. If we break that, I'm looking for the 55 to 30 range below that. Now, we broke the 75 to 80 range. We pushed into a low of 66, I believe, 65. The low of that candle, 65. And then we turned around and started going higher. Okay? So, yes, we took a dive. Yes, we fulfilled 80 and 75, but we didn't go any further. Okay? What's the risk? If you chose to take that interpretation and expectation and executed a trade, the risk is what? We get short here in this area that I had marked off on the chart and defined. Okay, so listen, I'll go benefit of the doubt here. I'll go below this area, and the risk is essentially we close back above it. So I will use the wicks of the candles there. So there was about a 10 tick risk. Okay. And my expectation was 80, right? That was my first expectation. 80 comes in at 28 ticks, okay? And I ranged that from 80 to 75, which I have marked off here. 75 puts me at 33 ticks. So essentially I got roughly a 3-to-1 risk reward. Risking 10 ticks. If the market does what I anticipate to do, we should push to 80 to 75. 3-to-1 risk reward, almost on the button, okay? Little give or take there, a few ticks. Right? And then what? Pay yourself, meaning take profit, cover your short, protect yourself, meaning push your stop to your entry or beyond. Whatever happens next is in the market's hands, right? Actually, this transpiring was in the market's hands. I didn't force this to happen. It was just the analysis, the interpretation, and the expectation provided by the evidence which the market offered at the time, which you should know can change within an instant, right? And that's applicable to every trade. Day trading, swing trading, position trading. It can all change in an instant, all right? There are no guarantees in the market. But The evidence provided the analysis, the interpretation, the expectation to push towards 80 to 75 at a minimum, and it did, which afforded a 3-to-1 risk reward. And I can tell you guys, I took this trade and I didn't trade anymore throughout the balance of the day. Why? Because before 8 o'clock, I was done. I was done. I took the lion's share of my profit off here, and the little bit that I had left, I got stopped out. Okay, whatever. But you could see it, we started bouncing here and consolidating, and I was like, well, this doesn't look really strong. So that is what it is. But once you understand where to find these trades and how to identify them and how to provide the analysis and the interpretation and the expectation, and that's my goal, is through experience to teach that to you so that you can look at the market and go, hey, I recognize this. This looks familiar, and it may do A, B, C. Right? Once you have that interpretation, you can now place a leverage trade, meaning a large size trade, in the direction of which you believe it's going to go in, and you don't need a big move to make a lot of money. And you don't need to take a lot of trades to make a lot of money. Right? This is a business of probability. That's all that trading is. If you don't understand that, you need to go back and reevaluate what it is that you're doing. Trading is a business of probability. If you have an edge, right, and a risk management plan that puts your edge in the favor of you over the market, and you are very cautious with what you risk, that is ultimately how you become profitable, because over a period of time, your edge puts the probability in your favor. If you don't have that, or you can't employ it consistently, you will never be profitable. And if you are, it will be short term and you will go broke. And I'm not trying to be mean, I'm just giving you the hard love facts of what trading is, right? It's not about copy and pasting somebody else's trade. It's about having a system that is unique to you that provides your edge in the market. What do I provide? I provide the analysis, the interpretation, the expectation. What you do with that and how it fits into your plan is ultimately up to you. That's who I am. That's what I provide. Those are the things that I believe will lead you to being a consistently disciplined, successful trader over time, right? This is not a get-rich-quick scheme. This is not, I did this for 3 months. I should be profitable and never have a bad day. No. Right? There is nobody who is the best to their ability at what they do without investing years. Thousands of hours. I tell people all the time, 10,000 hours of screen time. Then you can tell me what to do. Right? I'll listen to you when you have 10,000 hours of screen time. I've been doing this for 13 years. Am I perfect? No. Do I take losses? Yes. That's the reality of trading. Because I understand trading is a business of probability. That if I employ my edge in the market, which is what my analysis, interpretation, and expectations is built around, that sometimes it's going to work, sometimes it's not going to work, but when it does work, it's going to work in my favor in a significant way and should work in my favor more often than it does not. That is trading in a nutshell, guys. Right? You can buy some smoke and mirrors or some well-written, copywriter marketing material. You can buy the sleazy sales lines all day long, and all you're going to do is spend tens of thousands of dollars. How do I know that? Because I've done it. I've done it. Right? I saw, what can I do to make trading easy? Guess what? Trading's not easy. Right? It takes years of experience to be able to analyze, interpret, provide expectations, and then employ an edge around those expectations that allows you to become profitable over time through understanding that trading is a business of probabilities. That's it, guys. Right? I was able to see what the volume was doing here, realize there was no initial follow-through, expect the pullback, and then say, all right, I can take a small risk here, and I'm looking for a push towards 80 to 75, and if the market graces me with more, 55 to 30. That's how it's done. That's how I do it. You may like it, you may not. If you do, perhaps you want to learn my ways. If you don't, that's totally fine. Right? Because at the end of the day, you have to spend time with somebody that their approach to the market resonates with you. That's the only way you're going to accelerate the learning curve. If my approach to the market does not resonate with you, it's not going to accelerate your learning curve. You're wasting your money and my time. But if my approach to the market does resonate with the way you want to see the market and interpret the market and provide expectations in the market and execute your edge against the market, then spending time with me, providing that, should help your learning curve speed up. I'm not here to do your job for you. I'm here to help you grow as a trader. So if you want to learn more about that, there's links below this video. If you have questions, my email's there. Feel free to reach out to me. If you'd like to leave a comment, I will personally answer it. If I can do something for you or help you in any way, please feel free to reach out, okay? I am happy to answer any questions I possibly can to help you decide how to move forward in your trading career. That's what I'm here to do, not here to sell you crap. God bless. I'll see you in the next video.